Welcome to TradeTheMBA.com. This is John. This report is for the 11th Veterans Day. Well, it's been a nice continuation off that number 2 and progressing nicely, at least from a daily standpoint. Obviously, like I mentioned before, we were going to slow down a little bit after a little bit of the erratic nature of things. ES is flirting with highs. It's an interesting thing because, as I talked about it before, there's going to be a little bit of sector rotation have to take place. This is why the Dow is doing so much better, because it had been underperforming, and so now it's performing. You're seeing the NASDAQ struggle, and a lot of that has to do with, the perceived construct that some of the tech companies are going to be under pressure for antitrust situations, like Amazon. Google, obviously, with their cozy relationship from the previous administration, could be under pressure from a new one, particularly as they want to roll out automation and things like that. So a lot of roadblocks to some of the development things that some of the tech stuff was looking at, because they were pretty much on the wrong side of the direction the election went. So that's going to have an impact to some degree. It's going to play itself out. I think it's a little premature, and some of it's a knee-jerk reaction, but there is a lot of necessity to move into different sectors. Obviously, energy is going to be an interesting one. Certainly coal, as I mentioned even before the election, and that aspect. NQ, you can see that clearly where we have everything rising for the ES. The NQ is struggling dramatically. It is putting in a buy right at this particular configuration here, so not overbought or oversold in that matter. I think that you might see a little more weakness into it as it scratches through, but it could be a bit overdone. And look at that, the Dow, breaking out into the new highs. So clearly the leader, everyone's going straight to the strength of the industrials, because they're looking at a situation where solid growth and those kind of policies look very attractive now. Positive extremes, which means it's getting a bit extended, might need to see it pull back to get a little more balanced. Euro is going to float right down around those bottom areas. I've been preaching this story for how long? Yeah, so don't even need to go down there. Nothing surprising about that. Like I said, oil, the concept of just adding more supply into the slack of demand could vary. We started to see some improvement in the economy at that particular point. If there's a perception that things are going to heat up pretty quickly, even with supply increases, you could see a turnaround here, and that's going to be directly impacted on how much additional supply the U.S. is going to throw into the market. Gold, it's interesting. This retrace, I think, becomes an attractive one. Obviously, we need to revisit the dip below the red line as we came down through here, coming right back to that same level. Could be attractive at that particular point. It's a little premature. We're not at a point where the market's heated up, so I think slow addition on new lows every time they come would be a good opportunity if you want to hold on to an inflation-based asset. My suggestion was to move to fixed rates, whether it's mortgages or otherwise, simply with that expectation that you will see higher rates. The Fed's going to be fighting the new administration coming through. It'll be interesting how that works, because the problem is that high growth policies are going to spark inflation. There's no other way around it. You limit immigration. You take out any of those pillars that I've talked about over and over. Low oil, massive influx of new labor, whether legal or otherwise, didn't matter. There was still a massive influx of labor. And you pull out any one of those, and interest rates are going to have to go up. And at that particular point, you've got some real serious budgetary issues with the amount of debt currently on the books. Now we're looking at the ES. We had it, let me shrink it a little bit, because these days have been so filled with dramatic volume that it's hard to get them all into one day. So you can see how I have to shrink that. So a nice little run up, then we ended up with a couple little short signals, and boom, we hit the bottoms on those. It was just a matter of backfilling some of the positive extremes and the fact that we got a little over exuberant. We ended up with some decent buy signals as we came through and then started to get higher readings from the DOC red as it moved higher, and then we ended up with closes above the long algo. And of course, you're seeing here with the ABM in place. Let's start to expand it now as we get that. And we proceeded to go nicely, and then we ended up towards the end of the day, and things started getting a bit softer. DOC spread started up here. didn't really retrace a whole lot, but there was a significant amount of movement as we got into the highs. Went from 70 down to the 60s, so it's an 8-point move, but then it turned around. New buys were sort of moving into positive realm right here. Didn't really move a whole lot price-wise, so that could be a problematic for a continuation. We might see a revisit back to lows. You can see we're getting overbought, so new money's not exactly pouring in at this particular moment. All things being equal, though, for everyone who was terrified that things were going to fall apart in that, no. And I gave plenty of reasons on the Skype chat, even mentioning how there was influence from Goldman Sachs even in the Trump campaign and stuff, so there was much to do about nothing, which is usually the case, and that's a beautiful thing the market does to cause weak hands to get pushed aside. Shake out is why we have an indicator called shakeout, simply because people fall for that. As always, though, I will be on the Skype chat. Look for me there. Trade well. We'll talk again later.